John Oliver weighing in on deep sea mining. I mean, I don't know if that has any cultural relevance anymore. Frankly, I didn't even realize the show was still on. It's an offshoot of the Late Show with, I don't even remember the name, where there's Stephen Colbert and John. So that's where I'm at on this whole situation of John Oliver weighing in on deep sea mining. Interestingly, I don't have a super dissimilar view, or shall we say skepticism, as John Oliver on deep sea mining. I have mentioned it here in the past, and as many people will know, we are all for exploiting resources on this planet in a safe, responsible, environmental way. And this is the underlying issue, and we're going to see it in this Guardian article that talks about the show, but really we had Gerard Barron on here, the CEO of the metals company, maybe 2.5, 3 years ago, and it sounded quite innocuous, the equivalent of picking up rocks on the beach. No biggie. I mean, the general tone of the conversation was you couldn't ask for a more environmental way of extracting resources. A good news story. But then I saw the 60 Minutes report, maybe 3 or 4 months ago now, and I mean, it looks like a massive industrial strength vacuum cleaner sucking in, the first, let's say, 2 inches of the seafloor, putting it through its processor, sifting through it and then throwing everything back out onto the seafloor, but really in a huge plume of debris. That's what it looked like to me. I reached out to the metals company. The press guy, who I still have a contact with, said Gerard Barron was busy, but that the CFO would be happy to come on. I said that would be great, and I never heard back. So I need to follow up on that now and get more details, because maybe it's not so bad. But the fact that they're not really being super forthcoming here is really feeding into the fears of people like John Oliver, who has, I think, some audience still, feeding into those concerns. And maybe the most significant thing about John Oliver talking about deep sea mining for 20 or 30 minutes is that The Guardian writes about it. Because I watched some of the show, it was unwatchable. It sounded like it was one guy in a studio with a canned laugh track with, what I'd call awful jokes. Now, this isn't a TV show review here. We are a mining podcast, but the reason we're discussing this is because there was a bit of a mainstream, you might say, discussion on deep sea mining. And just to echo that fact, I got a message from an artist friend who knows I do this podcast, and they had seen this article in The Guardian as well. So it is getting some traction out there. I'm happy at the end of the day that it is actually bringing attention to this issue, because to restate the point, there is a world of difference between picking up, I think they call it golf balls, we'll see in the article in a second, on the seafloor and vacuuming it up and putting it through your little filter and then throwing everything back down, but in a huge plume of debris, which frankly looks incredibly destructive. So we're just trying to find the truth. I don't have any agenda here. I'm not paid in this either way. There is still a free press out here. So hello and welcome to the Northern Miner Podcast. My name is Adrian Pocobelli, and let's take a quick look at this article. This is The Guardian. John Oliver on deep sea mining. Time that we stop treating the deep ocean as something to exploit. Last week tonight, host discusses the deep ocean and the private company looking to mine it for precious metals. And this article is by Adrian Horton at The Guardian. John Oliver dove into the controversial topic of deep sea mining on Last Week Tonight, particularly in the environment known as the Clarion-Clipperton Zone, CCZ, a Europe-sized area 3 miles beneath the surface of the Pacific Ocean between Mexico and Hawaii. There is virtually no light in the CCZ, and water temperatures in the CCZ can reach 0 degrees Celsius. Quote, and yet, for such a seemingly inhospitable place, there is still an incredible amount of life down there, end quote, said Oliver. Scrolling down a paragraph, the CCZ also contains small solid nodules containing precious metals such as cobalt and nickel, accumulated over millions of years. Given their content, companies are fighting to obtain what some call a, quote, battery in a rock, end quote, for their potential use in electric cars. Chief among them is Gerard Barron, the Australian founder and CEO of the metals company, who is pursuing what Oliver called, quote, commercial scale plunder, end quote, of the CCZ. Barron prefers to describe the process of mining these nodules as simply picking up golf balls as on a driving range. Quote, that sounds easy until you remember they're 15,000 feet underwater, end quote, Oliver argued. Barron's pitch, quote, massively undersells the damage this could do, end quote. And that's where we're agreed. To editorialize here, it was incredibly painful and cringe-inducing television. But what I saw in the 60 Minutes report, it's not even close to picking up golf balls. It's like as if you were to take the first 2 inches of the golf course, take it all, put it through a filter to collect all the golf balls, and what's left, gets put through the net. From what I could see, again, I'm trying to get clarification on this, and it's not really easy from the metals company. I would think it would be to their benefit, if everything is cool, to address our concerns here. So I have to say I'm actually, in the end, happy that this issue is being highlighted here. Again, the era of the mining companies plundering the natural environment is long over, if anybody has any doubts about that. So just finally here, I really hope the metals company will be forthcoming and help us understand what is going on. So I will reach out again and see if we can get some clarification for the listeners of this program. Continuing on, huge amount of news this week. Of course, there was the European Union elections where the Greens did terribly. Now, why that is open to interpretation. Everybody has their take on it, but some people attribute it to a bit of a pushback on the green transition. Javier Blas, the well-known columnist for Bloomberg, put out a tweet which I think summarized things quite well. Here's the tweet. Just over the last week or so, do you see the trend? New Zealand reversed the ban on oil and gas exploration. New York indefinitely postpones congestion fee. U.S. raises fuel economy standards less than proposed. And finally, Green parties lose vote share in European election. Interesting juxtaposition of stories by Javier Blas there. You know what I think it is? If I had to speculate, with the so-called cost of living crisis in places like the UK and really around the world, I mean, everything's gotten more expensive, hasn't it? One could argue the fallout from COVID, that has raised prices, you could argue, really, if you were to really, back of the envelope guesstimate at it, I mean, I would say 50%. I don't think that's a wild claim. I mean, the Federal Reserve might disagree with me, but I think that's about, a fair characterization, maybe even an understatement. I'm in Saskatchewan visiting my parents in Canada. My eyes nearly fell out of my head looking at the prices of, tomatoes, $8 Canadian, for a little plastic tray of tomatoes. I mean, come on, $8? And it's like, that was just typical. A head of lettuce, $5.99. So I think the issue is, to wrap up the point, is adding the costs of the green transition on top of the inflation. I think there's starting to be a pushback here. Perhaps, as far as what Javier Blas, I think, is interestingly pointing out here. And interestingly, another point in this discussion, we had a story on mining.com talking about India's election. Of course, Prime Minister Narendra Modi was re-elected, but he got a minority this time, which is being seen as a disappointment from his perspective. And interestingly, there's a story on mining.com that there is a climate dilemma in India where they're going to have to weigh growth versus climate-friendly policies that could impede growth. And I'll just read a couple of lines to give you the sense of the argument here. Prime Minister Narendra Modi, heading into his third term with a weakened mandate, wants India to embrace a new green era at the forefront of climate diplomacy and clean technology. And this is Bloomberg News via mining.com. To succeed, he'll need to balance those ambitions against a need to sustain growth and satisfy rapidly accelerating electricity demand, leaning on a fraying power system still heavily dependent on coal. And scrolling down just a couple of paragraphs, with energy security a priority, coal still accounts for roughly 3/4 of output today, and its use continues to rise, and referring to India. India plans to add close to 90 gigawatts of coal projects by 2032, about 63% more than the existing blueprint published in May 2023. So all to say, the mining industry is well known for being a quote-unquote difficult business. And the reason it's a difficult business is because it can't be abstracted away. It is a real-world business. You are facing the limitations of physics with mining. It is not something you can just hire a whiz out of MIT to outthink your way through this. You are forced to deal with the limitations of physical reality here. And we're seeing another example here in India where, basically ideology is crashing into, you might call, pragmatism. The ideology being, let's embrace clean energy, let's just say 2030, and we're going to be green. And the pragmatism being, if we want to grow our economy at the clip that we're doing and really become a superpower, we can't do that. We have to keep growing at, 7 to 9%, different numbers I've been hearing here, that India grew in 2023. So it's very interesting to see this happen. Now, interestingly, shifting gears a little bit, in Canada, we're getting a very controversial, I would argue, raise in the capital gains tax. And it's significant. Here's a headline from the Financial Post. Justin Trudeau to call vote on contentious capital gains tax hike this week. The measure would raise billions in government revenue, but has attracted the ire of Canada's business community. So this is Bloomberg News via Financial Post. And just a couple of paragraphs here. Prime Minister Justin Trudeau's government will call for a vote this week on a planned hike in the capital gains tax inclusion rate. And just scrolling down a couple of paragraphs, groups including venture capitalists, startup companies, and junior mining companies will have to wait longer to learn if their specific concerns about the policy have been addressed, according to government officials who spoke with Bloomberg. The legislation to implement the tax change isn't ready yet. This was published on June 9th, 2 days ago, and they're about to vote on it. And finally, further down the article, junior miners will also have to wait for the bill to see if changes are coming to tax credits aimed at boosting the sector. The mining industry has warned the capital gains hike significantly hurts the value of those credits, which are meant to help companies raise money to explore for critical minerals such as copper, nickel, and lithium. And there was an earlier story from May where the mining industry outlined its concerns in more detail. Canada's mining industry is pushing for a carve-out to the federal government's proposed increase to capital gains taxes. So this is Bloomberg News via the Financial Post on May 10th. And they're warning that it's going to make life more difficult for junior miners. For many investors, the tax hike would, quote, significantly reduce, end quote, the value of a measure called the Mineral Exploration Tax Credit, or METC, which is designed to help companies raise money to explore for critical minerals like copper, nickel, and lithium, according to the Mining Association of Canada. And we have a quote from Pierre Graton, the Mining Association of Canada president, who said increasing the capital gains rate, quote, effectively negates the tax benefit associated with the METC, end quote. Our sense is that the Department of Finance didn't connect the dots, end quote. And we saw this a couple of weeks ago when there was a story, I believe it was in Defense News, was the name of the website, where Bill Blair, the Minister of National Defense in Canada, was basically suggesting to allies that, Canada is going to be a wonderful place to provide us with these strategic and critical minerals that we desperately need in order to keep our militaries up to date. And so here we are. On the other hand, life is getting harder from a financial point of view for the exploration sector, which is really been down on its back from a financial point of view. And Ron Birnbaum, the CEO of Pear Tree Canada, has been making this point on this program at least twice. And we actually have another article from April 22nd, a Reuters article, which also addressed this, which quoted Ron Birnbaum, who said, quote, exploring for resources is venture capital at its riskiest, end quote, noting that flow-through shares offer a, quote, successful incentive, end quote. And he further said if there's not an exemption for flow-through share investors, quote, It means the likely end of more than 70% of all resource exploration in Canada. So perhaps I'll also reach out to Ron Birnbaum after this legislation is passed to see what actually happened here. That could be quite interesting to give us the debrief. Now, interestingly enough, you simultaneously get these other articles about how the federal government in Canada is helping. We have a story from Northern Ontario Business. 6 hours ago, feds provide $10 million to boost Northern critical minerals projects. Jonathan Wilkinson announced $5 million each for Sudbury Biomining Tailings Project and Temaskaming Battery Recycling Plant. Another headline, Electra gets Canadian government funding for critical minerals recycling plant. And this is by a staff writer at mining.com. Electra Battery Materials announced Monday it had received $5 million in contribution funding from the Canadian government to support the development of its proprietary battery materials recycling technology. So it's kind of a mixed bag, isn't it? And here's another interesting story when we think of that Bill Blair meeting in Washington. This is from June 9th, and it's CTV News Montreal. A Pentagon-funded Quebec mining project does not meet with unanimous approval in Duhamel. Residents of Quebec's Outaouais and Laurentian regions fear that a mining project near the municipality of Duhamel will harm the environment. Opposition has even gained momentum following news of the U.S. Pentagon's possible involvement. Last month, Canadian company Lamico Metals announced that it had received a $8 million U.S. grant from the U.S. Department of Defense and $5 million Canadian in funding from Natural Resources Canada to support further studies on the Natural Flake graphite project. And of course, China has almost a complete stranglehold on graphite, as we have discussed on this program before. The mineral could be used in the manufacture of batteries for electric vehicles. According to the Pentagon, the development of a graphite mine could strengthen the North American energy supply chain. The product could also be used for, quote, military purposes, end quote. And finally, resident Louis Saint-Hilaire, a spokesperson for the Quebec Coalition of Lakes Incompatible with Mining, said, quote, at first we were told it was an ecological project to make batteries for electric vehicles, but now we have serious doubts, end quote. And another community member, Claude Bouffard, said, quote, it's almost like an invasion. It's kind of betrayal by the mining company, the Quebec government, and we're still the Canadian government, end quote. Quite interesting. Natural Resource Minister Mété Blanchette-Vizina refused to comment on the Pentagon grant, but the project will have to be accepted by the local population before it can go ahead. Quote, the mining project must go hand in hand with social acceptability, end quote. So we'll say it again here, the mining industry is a difficult business. Coming up, we have a wonderful show with Craig Adam, who is on the front lines of the green transition. I met Craig in the Toronto airport just a week ago, and after hearing his experience processing uranium in Saskatchewan and now working in the wind turbine industry, I thought to myself, this is a missing part of our story, the people on the front lines of the green transition. And sure enough, it was a very interesting and insightful interview on what is happening on the front lines of this green, clean energy transition that, as we were seeing at the beginning of this show, is at the heart of, major debates that are happening just last week in the EU and India and around the world. So a wonderful, enlightening interview with Craig Adam on this week's feature content. Coming up on this week's CEO Spotlight, I'm very pleased to welcome Mike Spreadborough, Executive Co-Chairman at Novo Resources in Australia, who tells us about the gold projects that the company is working on. A fascinating discussion there as well. So with that, if you want to find us online, you can find us at northernminer.com. You can find us on Twitter at northernminer and on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Mike Spreadborough, Executive Co-Chairman of Novo Resources, for this week's CEO Spotlight. Joining us today, I'm very pleased to welcome to the program Mike Spreadborough, Executive Co-Chairman of Novo Resources. Mike, welcome to the show.
Thanks very much. Great to be here, Adrian.
Well, it's wonderful to have you. Australia is quite an exciting place for mining. We hear a lot about it. So tell us, for those that are unfamiliar with Novo Resources, could you give us a little bit of background on the company?
Yeah, so look, Novo's had a bit of a history across, many, many years since it started in various forms. So I won't reflect back on the history, but, let's talk about what Novo is today. We're dual listed, TSX and ASX, so that gives people a great opportunity for investment. Around about 350 million shares, of which 100 is on the ASX. So we've got great trading on both of those platforms. As you said, we're Australian based. We're headquartered here in Perth. All of our exploration tenements are focused in Australia, either in the Pilbara, which is about 1,200 kilometres north of Perth, or on the other side of the country in Victoria. So we are a pure gold explorer. Having said that, we wouldn't mind dabbling in a bit of copper, but we are really focused on gold, and that is our strategy. We have over 7,000 square kilometres of tenure in the Pilbara. Historically, that number was higher, but that just reflects the great work the team's been doing on really looking for value. So we've brought that tenure down a bit, and you'll continually see that magic tenements square kilometre number come down as we do more work. We like to drill. We work hard to be funded to do about 10 months a year of drilling. And as I said, purely focused on gold. And I've got to say, gold price is up. I think it's about 16% up for the year. So what a great time to be talking about gold and gold exploration.
Indeed, it is a very fortuitous time to discuss gold, isn't it, with gold hovering near records here. So tell us then, what are you focused on then at Novo Resources? Is it one project? Is it several projects? What are you working on?
Yeah, so if you kind of look at an exploration pyramid of 3 levels, our key project actually is a joint venture project that we have with De Grey Mining. People may not know De Grey, across the podcast, but De Grey's 2 billion market cap, ASX listed. It's the owner of the Hemi project, which they discovered many years ago. It's got about 11 million ounces, and they've completed a DFS and they're trying to fund it. So why is that relevant? Well, we have some tenements adjacent to the Hemi project. We started work in 2022 on those tenements. We built up a really great picture from surface exploration. Then we went in and did around about 40,000 metres of air core drilling. So air core is a technique we use in Australia everywhere to get undercover. It allows us to cheaply get through soils and to get a sample of the bedrock. So we did a lot of air core drilling, put together a map, a picture of what the underlying geology looked like. And that work really showed us that we had the same geology, geochemistry, vectors, all of those good things that matched the nearby neighbour at Hemi. So from that work, De Grey has come on board as a joint venture. They're now managing the exploration of that project. And why do we still call it our Tier 1 project, even though it's a joint venture? Well, De Grey is spending $25 million over 4 years to earn a 50% of the project. So it's huge upside for our shareholders, right next to 11 million ounce project. And obviously they're putting all of their great knowledge of that project in the ground. So Hemi is a really great project. We're right next door, same geology. That's our Tier 1 project. And you'll continually see news flow as that project is drilled by De Grey. Further south, some 70 odd kilometres south of Hemi, we have the Nunyeri project. This is 70% us, 30% the Creasy Group here in Perth. We're managers. Early last year, we started drilling a 5 kilometre, very, very strong soil anomaly across some structures. That drilling last year was really, really exciting. And we saw some great results. And on the back of that, this year, we've gone back drilling. And that program is underway at the moment and will run through to July. So, we've seen intersections between 2 and 10 metres and grades, between 1 and 12 grams per tonne. So this year's plan is really to understand the extent of that mineralisation. It's near surface, and it really will give us a flavour of, is there enough indication that this project could develop into something more, and will we continue drilling? So they're our 2 big projects. Across our 7,000 square kilometres of tenure in the Pilbara, you'll see the rest of this year we'll continue to work on target drilling. So we'll drill 4 to 5 holes at a whole range of targets which have been built up based on geophysics and soils work. So we're very active as an exploration company.
Okay, excellent. And just in terms of, say, the infrastructure, where are you on that front? Like, is it easy to get to, or is it pretty remote? Color the project a little bit more as far as, infrastructure and permitting.
So, like most places in the world, we work with our traditional owners to give us access to the land. And we have great relationships with the Aboriginal groups. So they help us complete heritage surveys so we can effectively design our programs not to impact on their culture. So great relationships with them, and that's not an impediment to us moving forwards. We actually see it as an absolute strength going forwards. The exploration regime here in Western Australia is very good. So it does not take us that amount of work to get programs of works approved. We've just got to make sure we do the flora and fauna. So the whole regime of being able to go for exploring for gold in the Pilbara is really good. The Pilbara is known for iron ore country, and most of our projects are probably 300 kilometres from the coast. So given the great infrastructure for the iron ore operations, you've got good access to water, power, roads, airstrips in Karratha, and we have an exploration team that's actually based at Karratha. We use that base for all of our programs. Locality is very, very good, great infrastructure, a great sovereign place for us to go exploring.
And as far as the roadmap then, so it sounds like you're doing drilling. Where are we in the roadmap, and where do you see this going in the next, 6 months to 2 years?
Yeah, for the rest of the year, people should see three things. One, you'll see us reporting on behalf of De Grey how the drilling program's going at the joint venture at Becher. You'll see between now and August results from our Nunyeri drilling and how that looks and how that's forming up for the next stage. And then in parallel to that, you'll definitely see results from all of the scout or targeted exploration drilling. So there'll be a lot of news flow going through as we try to prosecute this exploration program. And then around about November each year, we reflect on the results and we set up a program for next year. We're big focus explorers. That's what we like to do, and we'll continue to work there. And, we should also mention we've got joint venture partners on lithium, and those joint venture partners will continue to do either drilling or exploration work, and we'll report those as well.
So it sounds all very exciting. So boil it down then for investors. What is your message to them? In a sense, what are they listening to right now as you tell this story, if you could kind of summarize it in a few sentences?
Number one, Novo has exploration in its DNA. We've got a great history of exploration, and the discovery of Becher is a testament to our team. So number one message, we're a very, very focused explorer with a very international experienced team. So we have the credibility both in the team and management at board level for prosecuting the strategy that we want to do. And I think, as we've talked about, gold is a good place to be. It's a good place to invest. I always argue that in any portfolio that you should have some explorers, and why not have a gold explorer like Novo in that? And then clearly we've got a great portfolio of exploration programs that we're prosecuting, and things like Becher are tier one and Nunyeri is very advanced, and we look forward to hopefully positive results. And I think the last thing is, compared to a lot of other explorers, we're actually in a very great financial position. We have around about 15 million Australian dollars in cash, so we're well funded for what we want to do this year. And importantly, we actually have an investment portfolio, which is a bit odd, but we have $50 million of investments. The details you can find on our corporate presentation, but we will use that investment to look for other opportunities on behalf of shareholders. So overall, Novo is in a very good position to execute and deploy our strategy.
Okay, excellent. And you said at the start of the interview that Novo Resources is listed in both Australia on the ASX and on the TSX. Is that correct?
That's correct. And it's got the same ticker, NVO. So that's very useful.
NVO, excellent. And the website is novoresources.com. Mike Spreadborough, Executive Co-Chairman of Novo Resources. Thank you for joining us and sharing your insights on this week's CEO Spotlight.
Thanks, Adrian.
And thank you once again to Novo Resources for sponsoring this week's episode of the Northern Miner Podcast. Turning to the website, BHP faces test of patience after $49 billion Anglo bid fails. So fallout from the BHP Anglo-American deal continues. This is Bloomberg News via mining.com. Days after BHP Group failed to secure the $49 billion takeover of smaller rival Anglo-American, investors have one message for Chief Executive Mike Henry. Keep your cool. BHP argues it showed restraint in the battle for Anglo, a welcome attribute in a sector notorious for burning billions of dollars on underwhelming projects and ill-timed acquisitions just over a decade ago. The question now is whether the discipline holds, even with all mining bosses gunning for more volume in copper, the single most coveted metal as the energy transition accelerates. The Anglo Tilt was an ambitious bid to transform the world's largest miner into the top global producer of the red metal in one fell swoop. Having faltered, people familiar with the matter say BHP won't rush into more, at least in part because there are few alternatives when it comes to copper. Major deposits are increasingly rare and costly to develop, while the most obvious acquisition targets are effectively out of reach either because of ownership or valuation. And we have a quote from David Radcliffe, Managing Director at Global Mining Research. What is in BHP's portfolio is going to take time to deliver, and it's not going to be cheap. That was one of the reasons they saw an opportunity in Anglo to take their interest in three key assets in Chile. Copper is one of those commodities everybody wants to be in. The problem being, there aren't many of those assets and it's incredibly hard to deliver them. End quote. And we have another comment from Sam Barrage, portfolio manager at Perennial Value Management. Quote, they've clearly shown their hand and basically confirmed what a lot of people have been saying, what companies themselves are saying. The hurdles there are so high that M&A is a much more appealing option. And further, there's quite an interesting chart in this article. Again, it's on mining.com. Without a deal, BHP Copper's output looks set to fall. So you can see until 2030, BHP is actually peaking out in copper, which is probably another motivation here behind this attempted acquisition of Anglo-American. Continuing on. Indonesia considers terminating permits for some nickel pig iron production. This is Reuters via mining.com. The Indonesian government is conducting a comprehensive evaluation regarding the termination of permits for the RKEF smelters, which make products in the form of ferronickel and nickel pig iron, a mining ministry official said on Tuesday. So, interesting development here with all of the attention on the nickel market earlier this year. Continuing on, the world's biggest nickel producer is experiencing a rapid depletion of ore after a surge in downstream investment, prompting the government to seek ways to reserve stocks for higher value-added products such as the nickel chemicals used in making batteries for electric vehicles. Am I understanding this correctly? Because my interpretation of this article is that they're running out of nickel ore. And in January, all we saw was we have to shut down all the nickel mines because the market's being flooded. Let's continue here. Irwandi Arif, a senior official with the Energy and Mineral Resources Ministry, said the government is focused on the development of high-pressure acid leach smelters, which extract nickel and cobalt from laterite ore bodies to produce mixed hydroxide precipitate, a precursor material for the battery industry and smelters that produce nickel matte. It is unclear whether the possible termination will apply to existing permits. Reserves of ore graded above 1.5% are expected to last until 2029, assuming there is no further exploration, Irwandi told participants at an industry conference organized by the Shanghai Metal Market. The Indonesian Nickel Miners Association, or APNI, has also urged the government to impose a moratorium on new pyrometallurgy plants to extend the lifetime of high-grade reserves. Indonesia's high-grade 1.7% nickel ore is used mainly to produce nickel pig iron, a feedstock for stainless steel, with EV batteries using lower-grade nickel. I think it was Anthony Malowski in the past has pointed out that there are different kinds of nickel. So perhaps that is what's going on here in this article. But again, for all of the concern earlier this year, I mean, this is quite a story to read. And we're not even halfway through the year. We're to read in June 11th. Let's continue. China-Pakistan agreed to strengthen mining cooperation. This is Reuters via mining.com. China and Pakistan have agreed to boost mining cooperation and promote the implementation of a pact on strengthening mining development and industrial cooperation, according to a joint statement from the two countries. Pakistan Prime Minister Shehbaz Sharif visited Beijing from June 4th to 8th in a bid to upgrade cooperation under the multi-billion-dollar China-Pakistan Economic Corridor, which is a key part of Beijing's Belt and Road initiatives. So increased cooperation in mining between China and Pakistan. Very interesting. Continuing on, China's central bank paused gold purchases in May after 18 months of buying. This is Reuters via mining.com. China's central bank paused gold purchases to its reserves in May when spot gold prices hit a record high after 18 months of consecutive purchases, official data showed on Friday. And we have a quote from Ole Hansen, head of commodity strategy at Saxo Bank. Quote, China is nowhere near done buying gold, but the pause also highlights that they are humans balking at the prospect of paying record prices. Overall, gold is still consolidating, and the news will likely prolong that phase, but overall, the long-term bullish outlook has not changed, end quote. Kind of interestingly, again, as far as the tone of these stories is concerned, so that's June 7th from Reuters via mining.com. June 10th, headline from Reuters, China's central bank to return to gold buying as prices ease, analysts say. And here, if we scroll down a bit, we have David Tate, CEO of the World Gold Council, who told Reuters on the sidelines of the Asia-Pacific Precious Metals Conference in Singapore, quote, China's data did show a pause, but they are just waiting and watching. If prices correct to the $2,200 per ounce level, they will resume again, end quote. So interesting development there. Continuing on, another story relating to China. China May rare earth exports jump 36% year-on-year on restocking. This is Reuters via mining.com. China's exports of rare earths in May climbed 36% from a year earlier, customs data showed on Friday, buoyed by a wave of restocking from overseas buyers. The world's largest producer shipped out a record of 6,217 metric tons of the groups of 17 minerals last month, data from the General Administration of Customs showed. That compares to 4,566 tons shipped in April and 4,576 tons in May 2023. And here is the interpretation of what is happening here. This is Lu Hao, an analyst at consultancy Shanghai Metals Market. Quote, the jump in exports last month is mainly because that overseas buyers restocked in advance volumes needed to maintain production during the upcoming summer lull from July. Also, domestic prices had generally been on the rise from March to May, which to some extent propelled international buyers to place orders for fear of higher prices ahead. But we expect exports in June to fall, following high volumes in May. Prices of praseodymium neodymium alloy in China jumped by nearly 4% from late March to the end of May, SMM data showed. So interesting developments there. And continuing on rare earths, a company called Rare Earths Norway says its rare earth discovery is Europe's largest. This is a staff writer at mining.com. Rare Earths Norway has announced a mineral resource estimate that it said shows its fen carbonatite complex in the country's southeast hosts continental Europe's largest deposit of rare earth elements. Now, interestingly, it doesn't go into depth into which rare earths the company has found. Not clear yet, but an interesting story of mining in Europe. Also on the rare earths fronts, AI helps quickly develop rare earth-free permanent magnet. So maybe, thanks to AI, we may not have to worry about rare earths at all. Let's just read a couple of paragraphs here. This is a staff writer at mining.com. Materials Nexus, a UK company using AI to design materials for net zero technologies, together with the Henry Royce Institute and the University of Sheffield, designed and created a new rare earth-free permanent magnet. Dubbed Magnex, the magnet was developed in just 3 months, and according to Materials Nexus, can be produced at 20% of the material cost and a 70% reduction in material carbon emissions compared to rare earth element magnets currently on the market. So potentially a significant breakthrough there by Materials Nexus, the UK company using AI to create rare earths-free magnets, interestingly. Another headline, Energy Fuels begins commercial production of separated rare earths at White Mesa. So that is a mill in Utah where they are now beginning to commercially produce neodymium praseodymium in Utah. The company expects to have commercial quantities of separated neodymium praseodymium available for shipment by the end of the month. Continuing on, Zambia sees Cobalt spending $2.3 billion on giant copper mine. This is Bloomberg News via mining.com. So we had the marketing director of Midnight Sun Mining, who has partnered up with Cobalt and Zambia on last week's CEO Spotlight. If you missed that, well worth listening to. And this is Bloomberg News via mining.com. Cobalt Metals, the Bill Gates-backed mining exploration company, could spend $2.3 billion to build a major new copper mine in Zambia, President Hakainde Hichilema said, citing figures from the company. The firm aims to produce more than 300,000 metric tons per year at Mingomba, making it the country's biggest such operation, and will begin sinking the mining shaft in the first half of 2026, according to company officials. Their meeting with Hichilema on Friday was broadcast over state television. So, Cobalt continues to develop in Zambia with very high-profile backers, including Jeff Bezos, Bill Gates, and Richard Branson. And just a few headlines here. Copper price falls through $10,000 as exchange inventories keep rising. So copper has taken another big drawdown. Last I saw, let's just see here, and we're going to see that in metal prices, but just a little preview at $4.55 a pound. So taking a big break. Another headline, China's unusually large copper stockpiles fuel demand concerns. This is Bloomberg News via mining.com. China's copper inventories are growing at exactly the time of year when they should be shrinking fast, an anomaly that underscores concerns about demand in the world's biggest market. You know, every week it's a new story on the supply-demand situation. The last few weeks, the world has been coming to an end because we do not have enough copper. And now we have too much copper and there are demand concerns. So it just goes to show commodities continue to be a very challenging trade here. As Capital Economics called it in this article, a quote-unquote excessive optimism. Another headline, copper's spike isn't justified by fundamentals. Trafigura says, that's Bloomberg News via mining.com. And just a quote, Trafigura chief economist Saad Rahim wrote in a commentary, quote, prices of non-ferrous metals have moved much higher than fundamentals in the physical spot market might indicate or justify, especially for copper, end quote. On Thursday, he attributed copper's rally to a record to, quote, investment flows, end quote. And it brings to mind Jeffrey Christian, who mentions with precious metals, it is investment flows, which is the main driver of price. And just a couple more headlines here. Canada's 2023 gold output rose 8.3%. This is Reuters via mining.com. So Ghana produced 4 million ounces of gold in 2023. Another headline, opening of new mines boosts Ivory Coast 2023 gold output. So Ivory Coast produced a record amount of gold in 2023, rising to 51 tons from 48 tons in 2022. And another headline, firm tracks Congo gold with blockchain. You know, they may have to do that with the cobalt and the coltan and tantalum in the eastern DRC with all of the controversy surrounding that issue. And finally, Brazil seeks $20.7 billion from Vale and BHP over 2015 dam collapse. So it looks like they offered somewhere in the neighborhood of about $15 billion last time, and the government wants close to 21. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.45%. That is 0.04% higher than last week. The UK 10-year gilt is yielding 4.28%. That is 0.05% higher than last week. And Italy, perhaps with the biggest jump, perhaps related to the EU elections, now their 10-year is yielding 4.07%. That is 0.18% higher than last week. So perhaps a market response to the results of the EU election. Turning to precious metals. Gold is trading at $2,328.60 per ounce. That is $39 lower than last week. Silver is trading at $29.21 per pound. That is $1.46 lower than last week, so back below $30 for silver. Platinum is trading at $977.20 per ounce. That is $46 lower than last week, and palladium is trading at $891 even. That is $36 lower than last week. So metals taking a breather, and I noticed the US dollar was moving higher, so that may be part of what's going on here. Turning to industrial metals, copper is trading at $4.55 per pound. That is 12 cents lower than last week. Iron ore is trading at $108.48 per metric ton. That is $9 lower than last week. Aluminum is trading at $1.17 per pound. That is 4 cents lower than last week. Lead is at $1 even. That is also 4 cents lower than last week. Nickel is trading at $8.21 per pound. That is 63 cents lower than last week. So it continues to fall from $9.71. The lowest price we recorded here in the flooding of the nickel market was $7.11 per pound. So we're still at $8.21 after the drawdown from way over at $9.71 just 4 weeks ago. So interesting, volatility really in the nickel market. Turning to tin. Tin is trading at $14.27 per pound. That is 72 cents lower than last week. So still quite elevated, one could argue, at $14.27 per pound. Cobalt is unchanged at $12.32 per pound. Lithium is at $14 even. That is down 56 cents. And now flirting with a 13 handle, which we haven't seen for about 4 or 5 months. So lithium looking like it wants to return to recent lows. Uranium is trading at $87.40 per pound. That is $1.20 lower than last week, so edging lower. And zinc is at $1.29 per pound. That is only 4 cents lower than last week. Zinc holding its own. But across the board, there is red as the US dollar shows quite a bit of strength here. So the metals moving in unison, taking a break after a very impressive rally in the last month. And those are your metal prices. Coming up, I'm very pleased to welcome for the first time to the Northern Miner podcast, Craig Adam, who worked 14 years in uranium processing in Saskatchewan and now is working as a technician in the wind turbine industry. So on the front lines of the green transition. So really just asking Craig about what his career has been like. We talk to CEOs here, we talk to analysts, we talk to all sorts of people, but we don't talk to the technicians that much, the people who are actually doing removal and processing of these critical metals, the heroes really of this industry. So it is my great pleasure to welcome Craig Adam to the show. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome to the show Craig Adam, currently a wind turbine technician who grew up in Lake Athabasca in Saskatchewan and also worked on the front lines of uranium processing in Saskatchewan. Craig, welcome to the show.
Thanks for having me.
Well, it's wonderful to have you, Craig. It was great meeting you in line at the airport in Toronto, kind of haphazardly there. And it was great just to hear your story. And I thought to myself, the fact that you had worked for Orano and you were finishing your training in wind turbine instrumentation. And I just thought, we talked to CEOs here, we talked to analysts and everything, and there's kind of a missing puzzle piece here is what I realized when I talked to you. So anyways, I'm very glad to have you on the program to get your perspective on this industry.
Thank you.
So tell us then, I guess how you got started and maybe even growing up in Lake Athabasca. How did you get involved in the resource industry from the perspective of growing up?
Well, I was born in Saskatoon and I was raised up in a little small town called Fond du Lac up on Lake Athabasca. And the entire area, a good majority of the people up there, their source of income is the uranium mines up there. And I was involved with them for 14 years before I switched to the wind industry.
And tell us about where you grew up then. So you grew up in Saskatoon, you were saying, but then you moved to Lake Athabasca?
I was born in Saskatoon.
Yeah, you were born in Saskatoon and you grew up in Lake Athabasca?
Yeah, a small little town called Fond du Lac. It's on the north shore of Lake Athabasca. It's an isolated community. So in the wintertime, you can go there through the ice road. So there's a full plowed ice road you could drive through. And right now, you could either fly or take a boat to my hometown.
Interesting. And what is the local economy there? Like, is it mostly resource related?
Yes, like I said, a good majority of the income is coming from the mines and local jobs. There's the small businesses here and there, but a good majority is the mining companies, which is Cameco Corporation and Orano.
Right. So it is uranium mining then.
Yeah. Yes.
Okay, excellent. So how do you get involved then? Like, do they have specific training programs that the government, I don't know, like, how did you get involved in uranium mining? You had friends, like, how did you get involved?
Well, as soon as I graduated back in 2007, I had already applied as a student position and I worked with site services, small repairs here and there just to get my foot in the door with the company. And after that, I applied full time for the actual mill operator position, which is basically the process of turning slurry into a product. For the training, most of it was done on site. They do require minimum GED, grade 12 education, and a driver's license, of course. But most of the majority of the training is done on site for the process side of things.
Was this a reserve at all, or was this?
Oh, yes, sorry. Fond du Lac is a reservation, yes.
How did you find it then? Was it a good job? Was it a fun place to work? Was it really hard, tough, laborious, long hours?
Yeah, there were good days and there were bad days, just like any other job. Physical wise, it was very physically demanding because we worked 77-hour weeks, 2 weeks in, 2 weeks out schedule. We rotated from day shift to night shift between those 2 weeks. And there's one part of the job where you physically have to be in front of 800-degree temperatures where the final product is cooked, called the calciner. And a lot of physical work. It's very demanding, even mentally too, sometimes because of a lot of numbers, the production, and just a whole bunch of factors, just like any other work.
Sure. But I mean, 77 hours a week, if I heard you right.
Yes.
That's intense. So how does that work? Like, and then you get like 2 weeks off? Tell us
Yes,
a little bit about that. Like, put some color on that.
Yeah, exactly. So 2 weeks in, so the first 2 weeks would be day shift, and then we get 2 weeks off, and then the following week would be night shift. And our schedule is basically 6:30 to 6:30. The mill ran 24/7, so we never left the area until we were properly relieved.
Interesting. And were all the workers from the community, or was it sort of a hodgepodge from all over the place?
A majority, actually, there's a contract stating a majority have to be from the communities, and then the other ones, like depending on the positions, like electrician, instrumentation techs, all the other positions, it's depending on your background of education. But for mill operations and whatnot, there was a contract stipulated that a good majority of the Northerners had to be hired.
So this was a contract between, say, the community and Orano saying, and I think this sounds kind of like what I would expect. You know, you can do your business here, you can mine or process or whatever the case may be, but there's an expectation that you're going to hire a certain, amount of people from the community to give jobs to the locals. Is that basically how it works?
Exactly, yes.
Okay, excellent. So how long were you doing this job? You're saying basically processing the slurry. And could you just sort of describe what that is and what that means?
Well, from Cigar Lake, the slurry is trucked in through these state-of-the-art tanker trucks. You couldn't even puncture it. Like if it fell over a cliff, they're very rugged, reinforced steel containers, and then they would be brought into the mill. They'd be vacuumed out, and then they would be put in these large containers called pachucas. They're air agitated from the bottom, so it never settles. So from there, it's sent over to leaching. And leaching is basically what it sounds like. We add hydrogen peroxide, some ferric sulfate, and then some acid to it and extract out the uranium. It'll separate it. And from there, it's sent over to clarification called CCD, counter current decantation. From there, the solids are separated from the liquid. And the liquid is forwarded over to another clarification area with sand filters and a thickener. It's reduced down to like very clear solution, but the solution is actually green in color. So that's what they call Prague aqueous. It's loaded with uranium. So from there, it's sent over to solvent extraction. Solvent extraction, same thing. They add some ammonia and some acids. It's all pH control. So once they get the desired pH levels, and then from there, it's sent over to precipitation where the pH is raised. And once the pH is raised, the liquid turns to a solid, and that's where we get the yellow cake. So from the yellow cake is turned to a solid inside the thickener. So for a while, it builds up. And from there, after it builds up to a certain torque inside the thickener, it is pumped to the calciner, and it's a series of hearth ovens. I believe it was a total of 8 of them. And the bottom one was 800 degrees. So it's a series, like it goes up from 300 to 500 to 600 to 800. And it doesn't go past a certain temperature in certain areas just for quality purposes. So the purpose of the calciner is to remove any moisture. And at the end, you have a very condensed, heavy product that's packaged into 45-gallon drum barrels.
That is incredibly complex, isn't it?
Yes, the mill where I was working at was one of the most state-of-the-art advanced mills in the world, where a lot of the process control was automated for safety reasons because of radiation hazards.
Well, that's exactly where I want to go next, which is what kind of safety precautions would you take? Of course, you have uranium and, as you say, radiation. What kind of precautions did you take, and did you feel safe being in that environment?
Yes, our gear that we wore daily, there was 3 essential PPE that we wore. One was a dosimeter badge that you wear around the chest. And another one is a little, it looks like an old 90s beeper. Basically, it's an instant readout of your surrounding radiation. So if you're near a high radiation source, it would start beeping, meaning you're in a high radiation source, so you get out of there. And the third one we wore was a small little air pump that you wore on a tool belt. And basically, it collected samples of the area that you were working, and you had to wear it for a whole month at a time. And there was different departments that took care of different things. The radiation department took care of all the PPE I just described. As long as nothing was damaged or anything like that, you would get your results. Like every quarterly, you would get a letter of how much radiation you were exposed to and what your limits are and whatnot. And everybody has been under the limit. The production of uranium is radioactive, but not as radioactive when it's turned to a fuel.
Oh, fascinating. And was that the process that you were involved in then?
Yes, so we just made the uranium metal product.
Okay, excellent. And in terms of security, I mean, was there a lot of security? I mean, yellow cake, it sounds like it's important. I mean, I think of the Iraq War when they're trying to get yellow cake uranium from Niger, and only if you can tell, but I imagine there was a certain amount of security involved. I mean, it's not like there's that many people who are necessarily going to track it down there, but you never know. What was that like?
The shipping process was very unique because we had a weight limit of how much we could load in the truck because of the highway conditions, right? So you need certain weight limits. And the way that we loaded the barrels into these freight trucks, if the freight truck fell over, like nothing would come apart. Like everything's zipped up together so tightly. And on the outside, there are radiation markings. It's a Canadian law. Like when you're shipping chemicals or any hazardous materials, you have to have placards on the outside. Once it was off-site, it was totally up to the driver's discretion, but you know where it would be shipped to. Like it would be either down to the States or Port Hope, Ontario. Security-wise, it wasn't that complex, like let's say a diamond mine would be, but there are measures there to keep an employee safe and the company property safe, of course.
Sure. No, very interesting. And just as we start to wrap up on the uranium side of things, how was the pay? Like, did you feel like you were well compensated? Was it a good job in a sense from a salary point of view for you?
Yes and no. At the time, a kid coming out of school with that kind of money, that's a lot of responsibility in your hands. But depending how you looked at it, like I was making 55 an hour, but then again, the taxes and everything, you kind of broke even. And it's kind of funny. I'm working with the wind turbine industry now. What I make in the wind industry in 1 week took me 2 weeks at McLean.
Interesting. So when did you move in? Like, how many years did you stay at McLean?
In between the 14 years, I kind of had to bounce around departments because of the fluctuating uranium prices, because we had that big uranium price drop back in the early 2000s, and where uranium was up to $155 a pound, and everybody was excited for that. But then the market kind of crashed, and I actually bounced around, like even the exploration department, where we went out and actually went to drill sites and tested for uranium.
Fascinating. And just actually finally on the uranium front, like because you grew up like Lake Athabasca being a community by a lot of uranium, was there ever a sense that it was dangerous being in a geographic location that had a lot of uranium in the ground? Was there any sort of talk about that in the community ever?
Oh, of course, because, well, next to Fond du Lac, this is a whole nother history that could be for another time if you want. There's a small abandoned mining town called Uranium City. And that's where my family actually originates out of. And a good majority of the people there, like everybody had moved out when the mines had shut down, but the safety practices compared to back then to what we did was far different. Like I do understand like a far majority of the former employees of the former mines at Uranium City have had or passed from cancer.
Wow. So there was definitely a history there
There's definitely
and
concern.
definitely. And as far as the community itself, was there a sense that there were higher rates at all or not, just in the regular community?
Well, everything is actually monitored too by the mines. I know for a fact, Orano did where the mine sites are. They have air monitoring and water monitoring and soil monitoring.
Oh, that's impressive. So it does give you some sense of comfort.
Exactly. Back in the early 70s and 80s and 90s, when Uranium City was running, a lot of this stuff didn't exist.
Wow. So times have
Huge.
changed. Quite a huge price to pay. So why did you end up then deciding to move to the wind turbine industry from uranium? Was it as you mentioned, you make in 2 weeks processing uranium, you made in 1 week with wind turbine instrumentation. But did you know that beforehand? Like, why did you end up moving?
Well, I had some disagreements with the company and I wanted to move up and it wasn't going in my favor. And I kind of did have enough of that life because when you're working 2 weeks in, 2 weeks out for 14 years, that's your second home, whether you like it or not. And the people you work with, that's your second family. You're on their property for 2 weeks. So you were basically treated like their property for 2 weeks. And I kind of got tired of that. And just dealing with the chemicals and everything too was another factor. Like the only chemical on site that ever scared me was hydrogen peroxide. And we're talking 98% concentration, not this 0.5% stuff you find in the pharmacy.
Okay, interesting. And that's dangerous.
Oh, very dangerous, very oxidizing. If you have a splash of that on your clothes, you have seconds to take it off or else you'll be up in flames.
And you're kind of mentioning, and we don't need to go too deep into this, but it's very interesting. So you wanted to move up. Like, was there any sense that there was an opportunity if you wanted to move, say, to a management or executive role? Was there a path for you? I mean, this is why a lot of people change jobs because they feel like there's no path for them. So they want to go somewhere else. Did you feel like there was, or were these jobs in a sense that the community had, under contract? That was it. Like, in a sense, you guys can have the jobs at the bottom, but don't expect to move up. Like, could you just put a little bit of light on that if possible?
Well, yeah, there was a supervisor position that I wanted to apply for, and I did 3 times and I was denied 3 times. So the third time was kind of the last draw. And the funny thing is, like, I've lead handed, meaning that I was still a union worker, but working for the company, supervising, but not with all the supervisor power. So I couldn't discipline anybody. I couldn't reprimand anybody, none of that. I could just lead the crew, make sure production was still going. And I had enjoyed that. And I knew the crew, I knew the process, I knew the paperwork, but they wanted somebody else. And that was a company decision. And it was my decision to leave after that.
Right. So it just was what it was. But it almost, and final question on this, it's almost like you were doing the job, but you weren't getting the recognition for it to a certain degree. Is that fair?
Yeah, that's fair to say, yes.
Okay. So tell us about wind turbines. I mean, again, when I met you in the airport there, I just thought you're in such topical industries. I mean, uranium is coming back now. And of course, there's the whole green transition. I suppose there's a lot of money in wind turbine manufacturing, or you mentioned you're doing instrumentation. What are you doing? What are you training for? What do you hope to do in this industry?
When we met in Toronto there at the airport, I had just finished my 2 weeks course training for Siemens Gamesa. They required that training to be on their turbine sites. It's just a company policy. And they had taken care of the bill for the training, so we were more than happy to take it. When I first started with this company I work for right now, it's called C&C Wind Energy. I started with them as a quality inspector for the turbines. So the site I am at right now, I just got back, was the very first site I actually started with here, which is just outside Herbert, Saskatchewan here, a little turbine site called Blue Hills, a Siemens Gamesa site.
Interesting. And what do they do there? They build wind turbines?
The site, no, this is power production. Once the turbines are built, it's signed over to the customer, and then they start producing energy.
Right. Okay. So what exactly then are you doing?
Right now, we're doing warranty work for Siemens Gamesa that's covered by their warranty policies. When I started here, when these first came off the trucks, like I said, I was doing quality and assurance. So I wrote down all the serial numbers, make sure like there's documentation's up to date. And some of the most fun part too was a process called bolt scoping. And as I mentioned earlier, it's for like the major components that keep the whole turbine together. It's basically an ultrasonic measurement of how much force is on every bolt. And the major components, every bolt has a serial number, which is also pretty fascinating.
Very much so. And so you're basically doing a kind of, as you mentioned, I think you said quality control of sorts and making sure everything is up to snuff. Is that fair?
Yes. Yeah. So basically, my job was basically to deliver a product that was advertised by the company.
So you've had this very interesting career so far in the resource industry. I mean, what are your thoughts right now? Like, are you excited? Are you proud in a sense to work for the resource industry? Is it just a job? Like, hey, what are your kind of big picture thoughts on what you're doing and where you're going?
Well, right now, since I'm from the far north, I am actually the only person that I know of at the moment that's doing this kind of work, because everybody I know is in the uranium industry. And this position I'm working to is not for everybody, because we're climbing like 400-foot towers.
Wow. Yeah, so there's also maybe a different kind of danger component. Would that be accurate?
Yeah, so for the wind turbine industry, everybody would agree it's the height, like falling objects, slipping and whatnot, but you are trained thoroughly for that. Like, you don't touch that ladder unless you're tied off. Climbing the ladder, like, there's a cable that goes from the base all the way to the nacelle. You're always tied to it, and you're trained thoroughly.
Excellent. So the mining industry is known as having a real lack of people that are, taking classes to get into this industry. In a sense, you could argue it has some of the biggest opportunities of many sectors of the economy. Do you have any big picture ambitions here? Things you'd like to accomplish? Would you like to end up in management? Where do you want to go here, big picture?
Well, with my company, I travel lots, so I work wherever they send me. And I enjoy that really much because I get to see different communities. I get to work with different people. So I'm actually really happy with this position.
And do you have any final thoughts for us based on our discussion? Is there anything we haven't discussed that you think should be mentioned to a mining audience?
Well, a lot of this energy sectors and everything ties together at the end of the day, right? Like, I work on turbines now. It still ties to the grid. And I'm also for nuclear power as well, because it's a huge resource coming out of the far north where I come from. And it's employing a lot of people up there. Like, it runs in my family. My late father worked in the uranium industry. I worked in the uranium industry. And my son, it's up to him if he wants to work there as well. So it's going to be there in the north, hopefully as long as possible. And I just hope it benefits a lot of people that are especially coming out of school.
Indeed. And finally, do you feel like it will benefit them?
Once the prices of uranium starts rising, I believe so, yes. And the turbine industry also is another growing industry in Canada. safety precautions, everything's there, but it's the same as any other job. Doesn't matter if you're a construction worker or anything like that. Training is there. Whatever you need, your resources are there for you.
Craig Adam, wind turbine instrumentation expert and former uranium processing expert. Thank you for joining us and sharing your perspective on this week's Northern Miner podcast.
Thank you for having me.
Thank you once again to Novo Resources for sponsoring this week's episode of the Northern Miner podcast. And thank you also to Craig Adam for sharing his perspective on what life is like on the front lines of the green transition. I hope you enjoyed the show. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.